Hey everyone! In today's episode of the 100 Degrees Kelvin Show, I'm going to be talking about accounting and interviewing the Deputy Director of the Arizona Department of Revenue. I hope you enjoyed this episode and don't forget to let me know in the comments what you think. With that out of the way, roll the intro. You are listening to the 100 Degrees Kelvin Show, a podcast that breaks down the hottest topics in the world today and inspires people to make a positive influence on the world around them. I'm Siddharth Adda, your host, and I will be bringing you the most important information of our times, as well as sitting with creators to discuss their journey and impact. Hey everyone, this is Siddharth here, and we are joined by Mr. Neeraj Deshpande, the Interim Deputy Director of the Arizona Department of Revenue. Mr. Deshpande has a Bachelor of Commerce Accounting from the University of Bombay and a BBA Accounting and MBA from the University of Louisiana at Monroe. While working at the Maricopa County, Mr. Deshpande has completed the ASU Certified Public Manager Program. Mr. Deshpande has a track record of succeeding at his work, from being a management analyst at the National Computer System to director positions in the business and finance sectors of various Arizona departments and agencies, joining the AZ Department of Revenue to oversee administrative services for tax collection. Working for nearly 20 years at various positions in government has culminated in him being appointed the Interim Deputy Director of the Arizona Department of Revenue. Through this interview, we hope to gain an understanding of his journey in school and his career, talking about being an accountant and their purpose, about the flow of tax dollars and his agency's role in that, the implications of cryptocurrency, and financial literacy. Thank you, Mr. Deshpande, for being here.
Thank you, Siddharth. It's a pleasure to be here. And looking forward to this interview. I think we're going to have fun along and learn along the way also.
Yes, of course. Let's start with a brief overview of accounting. Could you please explain what an accountant does, like its roles and responsibilities?
An accountant is an individual who has had some amount of education in the field of accounting. They could have had a 4-year college degree. Some accountants have done masters in accounting. Their principal role is to kind of keep track of, put it very simply, keep track of financial transactions that actually come in, and financial transactions in terms of money coming in and money going out, making sure that those transactions are recorded accurately based on the laws of the state, of the federal government, and the Constitution. They also have an oversight to make sure that the money that comes in and is spent for its intended purposes, there is some kind of an oversight responsibility. So think of it like mathematics, which is rule-based, in short.
Obviously, accounting is a very general term, so could you please briefly explain the most significant types of accountants?
Very good question, Siddharth. An accountant generally fall under many areas, but let me just hit on the high ones, okay? An accountant could be a public accountant. An accountant could be private accounting. Accounting could also be in managerial accounting. And accountants can also be auditors. And if you wish, I can go down the list exactly what a public accountant does, a private accountant does, and a managerial accounting does, and of course, is that okay with you?
Yeah, just briefly go in each.
Absolutely. So let's start with a public accountant. A public accountant is that accountant who actually works for a public accounting firm. That firm does not work for any agency or a company. They are their own entity. So those accountants will come and provide services to private firms, to government, to publicly held companies, doctors' offices, grocery chains. They could go down and simply keep their books, money coming in, money going out, balance the money. They could also provide expertise in terms of how can they report accurately and how they can get information from that. So they can do that purpose too. So public accountants are individual, independent accounting companies who provide services to various entities. The next one is the private accountant. Think of the private accountant actually has an accounting job in Intel, in Motorola, in Arizona Department of Revenue. They could work in all forms of enterprises, whether it's government or it's private. They're independent accountants who have been hired by the entity. So their job could be, again, is revenue coming in, how they record the revenue, expenses going out, how they record it, making sure that the books ledgers are well maintained, and they run monthly reports, making sure that their books are balanced. They have various areas of private accounting. There are folks who are managing the bank account. There are folks who are managing just the expense account. There are accountants who manage just the revenue part of it. And there are accountants who are looking at the payroll expenses. So that's an individual accountant who works in the private sector. Now comes an interesting area, which is managerial accounting. Managerial accounting are those accountants who are able to provide reports and trends and business insight to companies, whether they are public companies or private companies or independent doctor practices. So they are the ones, let's say, for example, your FiReSci club. Okay, if I was to come as a managerial accountant, what I'm going to say, okay, how much have you been spending on this? And what are you trying to spend? And that gets stored into a database and we run reports. It'll show you expense trends. It'll show you revenue trends. Take that and make it really large. Okay, let's take it to the state of Arizona. Managerial accountants are the ones who will actually do the budgeting part of it and say, hey, we're expecting so much money coming in. If there's $1 million coming in, you and I cannot spend $2 million. We have to live within our budget. So how much money is coming in? And then we plan for how much money goes out. That's called planning. Financial planning. How much money are you expecting? How much money are you going to spend? And throughout the year, you are keeping an eye on the trends, what's coming in, what's going out. You had forecasted $1 million, but let's say you do get only $800,000. Then you'll go back and make an adjustment and tell the management, you know what, we were projecting $1 million. I think we're coming at 800. Let's scale back our expenses. So when we come to the end of the year, we are actually not in the hole, you see, which is more expenses and less revenue. In short, managerial accountants have a significant role in the survival, fiscal survival, financial survival of all entities, even if we're in a small doctor's office, all the way to the federal government. And last but not the least, you have auditors. I can tell you is I can spend the rest of the day in telling you all different areas of accountants and the subtypes, but I think I want to keep it at a very high level. Then you have the auditor. Typically, auditors come in two areas. One is internal audit and one is public accounting audit. An internal audit, for example, in the Department of Revenue, is independent of the agency and reports only to me, the Deputy Director. That internal auditor will go down and keep an eye on all parts of the organizations to make sure that we are fiscally following the rules. For example, they keep an eye on the cashiers, the money coming in, is the deposits correctly done? They will go do samples across the agency and find out whether the folks are following the rules or not. So that's independent auditor, okay? Then you have the public accounting auditors. Those auditors are meant to go and check when you publish your financial statements, when the year is over, these auditors will come and make sure that they certify them. They'll say, okay, the management is saying that they made so much profit and so much loss and so much revenue, so much expense. I'm going to check independently to see if what they're saying is indeed the truth. So auditor per se provides an oversight to make sure the financial transactions are being done according to law, according to rules, and according to the tax code in our case. So that is the part of the auditor. So having said that, do you have any more questions on that or you're ready for the next one?
Thank you. I just wanted to clarify. So the public accountant is the one that, it doesn't necessarily work for you. You're not the only customer it has, but it essentially does the same work as the private, just maybe not as in depth. And the private's the only one that really works for you and only you.
Exactly.
Right. The managerial and cost accounting is where it sort of blends the line and it provides advice. It blends the line between the public and private, and it provides advice, correct?
That is correct.
And finally, auditors are the ones that make sure all the transactions. So maybe it could be the transactions of the other accountants that are overseeing it, and maybe the company or the agency or whatever institution itself is following all the rules and making sure the transactions are accounted for correctly.
So auditor is literally an oversight. Just think of the person as someone who is actually looking at your work and providing an oversight whether you're doing your job in terms of providing review for, and to give that report to management. or to whoever the client is. Because think of yourself, okay, if you're head of a company and you don't know what your accountants are doing, what your revenue managers are doing, you could have an independent person come in and review your practices and then give you a report. Similarly, if you actually have to apply for a loan for a company, they would like to have an audited financial report. So when you go to the bank and say, hey, I actually make $1 million a year, I would like to get a loan of $500,000. Now they know that you have a revenue stream of $1 million coming in, that you will be able to pay it back. So that's why the auditor role is very critical. They're trained accountants, and they go ahead and certify beyond that and become certified public accountants, become certified internal auditors. So they're trained and certified to actually do this. They have a very keen eye on people and they can sense where a fraud has been committed or where, it's unintentional mistakes. And they'll give advice, they'll give their audit findings. And so management can take, corrective actions.
Yeah, I know we're going to go over this later on, but I'm sure auditors for this specific purpose of uncovering fraud, they're going to have a big role in government. So the government's going to employ a lot of auditors to make sure, the money is being correctly used, right?
Absolutely, 100%.
All right, perfect. Thank you.
Uh-huh.
So let's move on. I've read about forensic accountants in the news recently. Could you explain what they do and their implications?
Very, very good question. They actually they are accountants who have had some audit experience, and they're especially trained in detecting fraud and detecting some malpractice in accounting, So bottom line is that they're trained to understand computers. They're trained to understand the tax code. They're trained to read financial statements. Forensic accountants are pretty much mostly in law enforcement, and the FBI has them. To give you a very interesting example is, I don't know, you're too young to remember who Al Capone was. Even I was very young. He was the famous Chicago mafia who was selling liquor during the Prohibition. And in that, there was a lot of violence between various groups, and people got killed. But guess what put him in jail? Tax fraud. So you actually had forensic accountants from the tax department go and look at his tax records, and he was not filing his taxes accurately. They got him on taxes. Think about the fact is the individual big companies, whether they're from Las Vegas or whether they're from big casinos, they have to get loans to actually run their casinos. And they may submit financials saying they have $1 million revenue coming in, or maybe multi-million-dollar revenue coming in. So based on the revenue stream coming in, they will request the bank to say, hey, give us the loan because we are getting a lot of money coming in. We can easily pay the loan off. Well, what happens down the road, right? The money doesn't come in and they call for bankruptcy. And then the bank is out of luck because they're not going to get their money back. Well, they can file a lawsuit and say that the financial records provided to us were falsified. Then Department of Justice or the county attorney or the city attorneys will go in and send their forensic accountants and go in and look at all the documents that were submitted for the loan. Look at financial trends, the finances that their revenues coming in, and match that to the bank statement. Is the bank showing so much money coming in with this? Also show their expenditure streams. Also see if their financial statements like profit and loss has been certified by a public accountant, certified public accountant. In short, forensic accountants are the ones who are peering into financial transactions done by an alleged fraudster. And they're taking a look at the books to make sure if fraud was committed or not, and then provide a report. Do you have any follow-up questions? Does that satisfy you?
Yeah, it does. Just going back to the Al Capone example, he wasn't caught on any murder. He was just caught on taxes.
Exactly. That gives you the power of what forensic accountants do, and they were able to go there. There's even a movie, Untouchables, on it. Maybe after a few years you can go see it. It's pretty interesting, but it tells you of a group of people who actually went ahead and got him on tax fraud.
Of all the things he's done, like that's the least dangerous, and they got him on that.
Yes, I see it a little differently, Siddharth. If you're not giving your due share of tax money to the government, and I know we'll cover it down the road, that tax money is used for public safety and healthcare and education. And if you don't have enough money, then people die because they don't have coverage. People are not safe on the streets because you're not funding the police. So it has an indirect influence on it. But you're correct. On the face of it, it looks like, killing somebody obviously is more dangerous, and we should put these bad guys behind. But these folks, forensic accountants, did their job, and Al Capone was put away.
Yeah, thank you.
I mean, think of it when you go down to the movie theaters and you buy a movie ticket, or you go down to a restaurant and you pay bills and to pay your food cost, okay? Or you go down to the grocery store and buy something. All that you end up paying taxes. Or you end at the end of the year, you can see your father filing your tax returns. So those monies actually are coming into a bank, okay? That bank is managed by the Treasury. But when the money comes into the Treasury, okay, the Treasurer's office do not know what it is. So Department of Revenue receives returns, tax returns, they receive reports, they receive filings, and our revenue accountants go in there and say, this money belongs to the city of Phoenix. This money belongs to the state of Arizona. This money belongs to the Maricopa County. So on a weekly basis, every Friday, my team of revenue accountants do their accounting from 5 o'clock in the morning, and by 11 o'clock, they have sent reports to the Treasury. The Treasury gets those reports. These are accountants. We can go back in time. We said these accountants are also doing reports, and they're analyzing transactions. So you have a group of accountants who are seeing the tax filings. They're matching the bank statements that are coming from the Treasurer's office. They match those two. They produce reports, and they send it to the cities, the counties, and the towns, and they also inform the Treasury. The Treasury takes a look at it, and they see all the money that is collected in there, and they start allocating it. The allocation goes to the state. The allocation goes down to the counties. The allocation goes down to the cities and towns. And that's how the distribution is done. And on every Friday at 11 o'clock, we get the all clearance saying, hey, the monies have been distributed. So tax dollars coming in, we do the accounting, we match the bank statements with what the treasurer actually has, and then we inform the Treasury, as well as the cities and towns, what money belongs to them. And then the money that goes to the cities and towns and counties in the state, they use those monies to take care of their expenses.
All right, thank you. Could you briefly explain the most important tax types and how the public ends up paying them? So how does the public get the money to the Department of Revenue? So that little section of the process?
It's a very good question, Siddharth. If you look at the United States as a whole, okay, you have a federal body called the Internal Revenue Service that tackles the federal tax. Arizona Department of Revenue tackles, administers the state of Arizona taxes. So at this moment, for clarification, I'm going to focus purely on the Arizona Department of Revenue and what are authorities on those taxes. So in general, you always have an income tax, whether you work in a grocery store or you're a neurosurgeon. You'll be getting a salary. That's an income. You have to pay taxes on that. Number two, you have what is called as sales taxes. In the state of Arizona, we call them transaction privilege taxes. Transaction privilege tax is a tax that a business has to pay the state of Arizona. It is a privilege for them to do business in the state of Arizona, and they have to pay a tax, for the business that they do. Think of it like a sales tax. Every time you buy something, you have to pay a tax on it. If you're in the city of Chandler, you might pay like 7% or 8%, and you will actually see a bill. It says, hey, you bought, your, let's say an iPod, okay? And then, what tax should you pay? Or you went and bought a CD, for example. So that's a transaction privilege tax, okay? Then you have the corporate income tax. The corporate income tax actually is corporation earned income. They have money coming in because they're selling, let's say Intel, for example. Intel sells chips amongst many things, okay? And then they have expenses to pay for their building, for their electricity, for their people, for the material they purchase, and they make a profit. So the corporate income tax is a percentage of the profit that they actually make. So if you really want to see, you have the large tax types are transaction privilege tax, individual income tax, and corporate income tax. And then you have another branch called luxury taxes, buying boats and ships and, buying cigarettes and so on and so forth. I won't go in that detail. So let's just talk about these. And so to ask you this question on transaction privilege tax, to give you a brief idea, okay, the Department of Revenue, what their role is on this, okay? In the year of last year, we collected and distributed almost $20 billion and a little bit more, out of which $12 billion were from transaction privilege tax. $6 billion were for individual income tax, and the balance was split between corporate and luxury taxes. So how does it come to us? So if you are a business, let's just discuss TPT, transaction privilege tax. That's by far the most important one. So while we're on the topic of transaction privilege tax, which is by far bringing the most tax revenue to the Department of Revenue, which is about $12 billion, it's all the sales of goods and services. For example, you go down to a store, you make purchases, or you pay a rent, or you go to buy a house, and then you want to rent it out, or you want to buy a vehicle. So all those, you have to pay a certain tax that goes with it. That's called transaction privilege tax. So the person who's selling it to you is going to go every month, every quarter, and every year based on their sales volume, and they will do a filing. That's called a filing or a return. They will say that they sold $1 million, and on the $1 million, they sold these products. And so this is the tax they're giving us. So the tax revenue comes in from that. Income tax is done two ways. When you get a paycheck, there is money that is being withheld from your income. That's called withholding. So they take the money and they put it and give it to the Department of Revenue. And then, like your father would, he would file a tax return at the end of the year. So he's going to file a return, that money comes in, Department of Revenue is going to see, okay, we withheld $100 from his paycheck every month. Okay, he had $1,200 in taxes we have held. He really owes us $1,000. Now he gets a $200 refund. So that's how the individual income and withholding comes in. Corporate income have the same situation. At the end of the year, they will figure out how much profit they made. And based on the profit, they'll do a corporate income tax filing. And they will say, we made $1 million in profit, and we want to pay you 33% on that in taxes. So all that money comes to Department of Revenue. So what does Department of Revenue does? Its role is to collect, administer, and distribute taxes. So we have talked about how the money comes into us. The administration part of it is that, who does this money belong to? Is the money coming in, have they played by the rules? We have auditors who check to see the filed correctly, and if there's any fraud being committed. And then we have folks on the distribution side, our revenue accountants, who take that money on every Friday, will send reports out to the Treasury. And the Treasury will understand that money belongs to Arizona Department of Transportation, that money belongs to City of Phoenix, that money belongs to City of Chandler, that money belongs to Maricopa County, and then they do the distribution. So you can see money coming in from the tax types. Our team looks at it, administers the taxes, keeps the accountants keep the books, right? Who it belongs to, they do the reports and give it to the Treasury, and then dollars are distributed.
All right, that was a really good explanation. Thank you. Now that the money has been received by the government, how are they using it?
So let's go back a little, okay? Is to run government, they have to have an authority to use monies. Unlike money coming into your household and you have $100 and then you decide how to use it to $100, government has a process called budgeting. And the budgeting process is such as that you have branches of government. You have the legislature, and then you have the governor's office, the executive branch. The money that's coming in from taxation and the revenue that comes in, the legislature and the governor have to sign a budget bill, which is called the appropriation. That provides the agencies, the cities and towns the authority to spend those monies. So the way this works actually is sometime in the September, in the executive branch and the governor's office, there is an Office of Management and Budget, Office of Strategic Planning and Budget. They start asking all the agencies to give their forecast. Goes back to the conversation we had on managerial accounting. Okay, so these are budget analysts from all agencies. They will submit their forecast and say, hey, this is what we would like to spend. That goes to the governor's office. Then governor's office will look to Department of Revenue to say, what do you think the revenue forecast is going to be? How much taxes are you going to get in the next year? So we do our forecast. That is then taken a look at by the Office of Strategic Planning and Budget. They say, so much revenue is coming, so much money is being spent. Now they submit their budget to the legislature. Now the House and the Senate have their own budget office. It's called Joint Legislative Budget Committee. They will get together and they'll have their own budget. Then there'll be conversation between the executive branch and the legislative branch, and they come to an understanding. Hey, what to spend, what not to spend. And once that is done, it goes as a bill to the governor, and then governor signs off on it. Mind you, budget, unlike in the private sector, like in corporations, the state of Arizona, when they sign the budget, it becomes law. When they give an appropriation or an authorization to spend $82.5 million for the Department of Revenue, we cannot spend a penny more than that. So we have to live within those means. And not only that, they will tell you how much this money is going to be spent for. For example, every year, Department of Revenue is getting $3 million as an appropriation, a special line item to combat fraud. So we have auditors, forensic auditors, you have data science folks who are actually working on preventing fraud. So think of the money that's coming in, but money has to be spent. The governor is going to assign, along with the legislature, how much can be spent on public welfare, how much is going to spend on public health, law enforcement, Department of Revenue, Parks and Recreation, the jails, the land department, and so many areas. But unless you have a methodical budget planning process that the legislature, who has been elected by the people, they represent the people, and the executive branch agree on a bill, how this money is going to be spent, we cannot spend those monies. And we're always working a year ahead. For example, right now we are in fiscal year 21. The budget for fiscal year 22, which is going to be next year, is still being discussed in the legislature right now. And once it becomes into law, all agencies, cities and towns get those reports, and they have the rules as to what they can spend, what they cannot spend.
Yeah, that makes a lot of sense. Thank you. So far, we talked about the various financial and accounting topics and the importance of financial literacy. Understanding how your money is used by the government and how it gets there is an important topic to understand. In the future, you will need to understand how to pay taxes, and these brief explanations by Mr. Deshpande is an interesting introduction. So feel free to do some research if you're interested. Let us know anything useful you learned in the comments. If you'd like to learn more about Mr. Deshpande, there will be another part released shortly. Thanks for watching this episode, and I will see you on the next one.